Good morning, everybody. Hey, welcome to Friday. It is August 4th. Hope you guys have had a great week as we head into the weekend. Hey, yesterday, not such a great day, but not a really bad day either. It was better than the day before for sure. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things that we have no control over. What happens in Washington, what happens over in Russia and China. And there's just so many things that we don't control. Good news though, you can control what's happening in your portfolio. If you understand and know how much risk you have in your portfolio, and you know how much risk you should have in your portfolio, and those two things are matched up perfectly, then you know you're in the right place. That's exactly why I designed the core retirement design, because so many people don't understand the amount of risk they have in their portfolio. Give us a call at 863-382-0037 for your core retirement design. And we got Dave coming up next.
The power of love. It's love, man. That's Huey Lewis in the news there. I am Morning Dave, and it's 8:41 now, 19 before 9. Time to check in on your money and see what's going on Wall Street this morning. And I must admit, I there. No, not that one. That one. There. That's my bull crud alarm going off. Phillip Statler is here from Statler Financial Services, and my bull crud alarm is going off, Phillip, on these unemployment numbers. How about yours?
I was going to say, it's not because of me, is it?
No. Here's the government data dump for the week, and here's why I blew off my bull crud alarm. We added 13,000 fewer jobs last month in the economy than we expected. 187,000 new jobs added last month, according to the government. And on top of that, they revised downward the number of jobs that were added in May and in June. So in reality, we're off by something like probably 240,000 jobs across. And what happens? The unemployment rate that you're going to hear about every single top of the hour newscast all day, it went down. 3.5%, the official unemployment rate in this country. I don't get that math one tiny little bit. Do you?
It's the government, Dave. What can I say? You know, they're here to help.
But by and large, the jobs report that they dumped on us this morning is probably good news for people that are watching the Fed, because it does show a decidedly slowing job picture, and the other ancillary figures they put out kind of confirmed that. Month-to-month earnings in July were up by 0.4%. That was more than was expected, which indicates employers are hanging on to their employees. The number of hours worked, on the other hand, indicating a slower employment market, went down by 0.1 of an hour average across the economy. If I were Jay Paulson's Jiminy Cricket sitting on his shoulder this morning, I'd say don't raise interest rates next month. What do you think?
Well, yeah, Dave, but let's face it. How many months do they revise? Are they going to revise this one again? That's kind of the fly in some of the ointment is what's going to happen next month. Are they going to revise this up, revise it down? Is it really worse than what they say it is? Yeah, that's the thing about these government numbers, is that they seem to fluctuate after we get the headline.
Like I said, I look at the notion, how can you add fewer jobs than expected but still have a lower unemployment rate than it was expected as well? Bottom line is the employment market is still healthy, but it's showing distinct signs of slowing down somewhat anyway, which means the interest rates hikes are basically doing what we expected them to do, but it's staying all low enough and vibrant enough unemployment where if somebody wants a job, generally they can find it. It may not be a perfect match, but heaven knows there's still jobs out there.
Oh, definitely. I mean, the JOLTS report showed that earlier in the week. So there's plenty of jobs out there for folks to find. They just got to find the one that suits them best.
Yep, it was kind of funny with you. Before we went on the air, we were talking about it on the phone. You've got instantaneous response on your listings on the markets, and you said as soon as the 3.5% number came out, things took a dip on the indexes, and then as soon as anybody read and found out that the number of jobs created was disappointing, it started turning back up again. I kind of get the feeling that everybody else in the money sector has about the same reaction I do. A bull crud detector's going off somewhere.
Yeah.
By the way, I just got to note the 10-year Treasury yield is up to 4.199 as of this moment. The 2-year Treasury yield is up to 4.925. And boy, that credit rating decrease that we took is doing what the Federal Reserve couldn't do.
Yeah, it's jumping up interest rates for sure. And that's, the mortgage guys, that's going to be a tough road for guys because it's going to mess with mortgage rates for sure.
Yeah, I'm not looking forward to seeing what the guidance comes out at for the big publicly traded home builders that we quote every time that earnings season comes through, because they got to be looking at these increase in mortgage rates. And I mean, it's a marked increase over the last 3 to 4 days. If I were issuing guidance for a big home builder, I'd be kind of conservative right now, wouldn't you?
I would, until we get a handle on these interest rates. Costs are coming down a little bit as far as material costs, but labor and interest rates are kind of are offsetting those.
Absolutely, it's going to be interesting. But at the very least, we have. Again, it's weird. We have good news on the employment front because the employment market is not as good as it was supposed to be. But those of us that are saying that the Fed has done enough for the moment and they ought to pause, I call this a good news report this morning.
Yeah, I think so. I mean, and we'll see. We got a long ways really now before the Fed even has to start thinking about interest rates, but a lot can happen between now and then.
Absolutely. Because once again, to remind folks, the Fed does not meet in August. They don't meet now until September. They go to every other month for a couple of months in here. So consequently, we're going to have 2 of these unemployment reports before the Federal Reserve meets next. And that gives us a whole lot of slips between the cup and the lip before we get our next earth-shaking decision on interest rates.
Yeah, that's right. So we got time. We'll see what happens.
Absolutely. Earnings season continues, and my first reaction this morning is they put all the interesting stuff for us in one day. The 2 big A's in the tech sector both ended up reporting after the close last night, Apple and Amazon, and they kind of said different things, didn't they?
Well, they did. I mean, they both did okay from that standpoint. One did a lot better than the other, but Apple reported and they beat on expectations. Came in at $1.26 versus $1.19. Revenue, though, higher than anticipated, but still down 1% from a year-over-year basis. That was a third decline year-over-year number quarterly than we've seen. The other thing, it's got Apple really trading down today, 2.8, 2.9%. They're really hardware took a hit, but they're making it up on their services, between apps, their iCloud, other things like that, cloud storage, that's helping them bridge that gap. But their hardware sales were not where they really wanted them to be this last quarter.
Yeah, you get a company as big as Apple, and you look at, I think it's something like 60% of their hardware sales are in the iPhone. And there hasn't really been an exciting iPhone change since the Model 12, and the rumors have it that the 15 is just going to be an incremental change as well. You look at something that big, it's hard to say, oh my God, they're about to become a one-product company. But in reality, as big as they are rapidly becoming a one-product company, because when you look at services, the services include, okay, fine, you got 2 Apple products. You pretty much run out of your freebie iCloud status, so you have to pay $1 a month for the extra cloud capacity. Well, if I'm not buying another iPhone, I don't have the reason to need more services, so consequently, that's kind of sitting on an edge as well. I mean, when you talk about a $3 trillion company, it's hard to say, oh my God, they're living on the edge, but they really do have some chinks in the armor off of those declining iPhone sales.
They do. They need to beef up their other lines of business. to help compensate for that in years like this, or they've got to get really innovative on the iPhone to make it so enticing that people just have to trade up to the new one.
Yeah, and I'm sorry, the idea that they make the cameras fancier and fancier doesn't prompt me to want to upgrade. I'm still a once every 3-year upgrade on my phone, and that's for security value and keeping the operating system going. I don't care whether or not I can take a major motion picture on an iPhone or not. It's not why I buy a phone. So they're putting so much work into the camera, they're forgetting about the rest of the phone. And frankly, it's getting boring. So
yeah, and they'll
there.
fix it. They'll figure it out. They'll figure it out. They figured out a lot of things. So hey, the next
Heaven
one we
knows.
got is Amazon. Amazon obviously is a big player when it comes to retail and e-commerce. They had a really strong second quarter. They beat on revenue. They beat on earnings significantly. I mean, like 30 cents a share. So some good things for them. Their revenue actually rose 11% during the period, and beat by almost $3 billion going there. So Amazon's
Wow.
taking a huge hit. I mean, not hit, but a big jump, 9.3% up today.
I understand that the cloud services recovered too. They kind of had a chink in the armor in cloud services on their last report, but it recovered as well. So Amazon is looking borderline bulletproof right now, aren't they?
They are. They're looking really good. They sure are. Then let's flip kind of to some travel companies, Booking Holdings. That's the old Priceline company. They came out, had a good quarter. Gross bookings they expect for this next quarter to grow even more. Their second quarter earnings they beat pretty handedly. I mean, they came in at like $37.62 a share. They're only expected to make like $28.90 a share. So a huge beat there. And even revenue was a good number up as well. Well, that's funny. They were up by 12% early, Dave, but people must be taking some profits because they've dropped. They're actually down 1.5% right now.
It's not as big a stock as an Apple or an Amazon, so I suppose a few trades can drop them down on the futures, can't they?
I think so. It can. Now, this one is not an earnings call, but I want to bring this because it's just such a big swing. Tupperware Brands came out today, and they were able to finalize a debt restructuring deal,
Oh, good.
which is going to help them reallocate about $150 million of cash interest and fees every year. So that's going to help them. But it has their stock up 57% today.
How low did they get? I mean, I don't use Tupperware because old margarine tins are good enough for me for the little bit I restore. But, they're a heritage brand. I hate to see them falling on hard times. They've had some tough times.
52-week low, 61 cents a share.
Ooh.
Now think about this, Dave. If you had swept in when they're at their low at 61 cents a share, they're at $5.52 a share right now.
Hindsight is 20/20 sometimes,
Exactly.
ain't it?
Hey, another travel stock I want to mention really fast before we go. Airbnb reported they grew their revenue 18% over the same quarter last year, and they beat on revenue, beat on earnings, and they're thinking things are going to be good this next quarter. So they are trading up today. Well, they're another one. It must be the travel deal, man. They were up 6% earlier this morning, and they're down 1.7% this morning. So it's all in the details, I guess.
I would bet a nickel that it's the rise in oil prices that are giving some investors pause on those cruise and travel companies, and that'll become evident when you do those.
Yeah, that very well could be.
It's going through the roof this morning. Setting the table, it was kind of a modest off day yesterday. Everything was red, but it wasn't by much. I mean, 0.1% to worst case, a little over 1/3%. It was kind of everything on a hold pattern waiting for this morning. 45 minutes before we open today, Phillip, what are we looking at on the futures?
Dave, you made a indication, and things have flipped around. They are green right now. The Dow is up almost 0.2%. S&P 500 is up 1/3, and the Nasdaq 100 is up 0.5%. The Obviously, the VIX is heading down by almost a little over 3.5% this morning. On the other side, of commodity side, we got silver down a little over 1/10%, gold up 0.4. Crude oil, like you said, heading the wrong direction, up almost 0.5%, $81.94. Dave, I'm seeing gas prices at some pumps at almost $4 a gallon.
I was looking at one that was 391, I think, and I was kind of thanking my lucky stars I gassed up at the end of last week, as I generally get 2 weeks out of a tank of gas.
Yeah, I saw 399.
Yeah, maybe it'll slow down by the time I have to gas up again, but I'm not an optimist. By and large, the Asian rim markets had a little bit of a recovery overnight last night. 6 a.m. this morning, it was a very modest change on every account, but by and large, mostly green. European stocks halfway through our day are going downward. Not much, but about 0.5%, pretty much across the board in Europe. Getting a retirement plan together at any age takes a special set of eyes to understand where the risk ought to be depending upon what your plans, needs, and age are. That takes a pro. How do I find you to get that plan going, Phillip?
Dave, those are the exact reasons I created the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again on Monday morning to tell you what happened over Friday and the weekend and look ahead for the week ahead. Phillip, thank you so much. You have a dynamite weekend, and I'll see you Monday.
All right, you have a great weekend too.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. You can't see it.
Hey, folks, again, I want to thank you for joining us. Have a great weekend. Be right back with us Monday morning, same time, same place. Until then,